my introduction into this property investment opportunity that I want to share with you, and hopefully you'll see the importance of or the profitability that this property has, and that you will be excited to join me on this investment opportunity as I explain it to you. This property is located in the heart of Denver, just south of the heart of Denver, downtown, and it is located on 1380 West Mississippi Avenue, Denver, Colorado 80223. If you know anything about Denver, off I-25, Mississippi Avenue traverses the highway interstate, and you'll be able to take the exit and you get right to the property within half a mile from the exit. Mississippi Plaza is a great investment opportunity, currently listed for $4.0 million. This property boasts 24 units. Each of these units are a 1-bedroom, 1-bath property. And price per unit for this is $165,208. Price per square foot is $292.40. This is a brick-built home, and it currently full total size for the property is 13,560 square feet on a 0.43 acre lot, which is nice because that provides parking for up to 30 off the street spaces, so they don't so tenants would not have to park off the street and have a little bit more security, being able to see their vehicles or having their vehicles located within right there in front of their property. Heating for this property is forced air. Roof is flat, but it's been repaired, and it currently has a cap rate of 6.94 and a cash on cash return of 8.66%. This is a great opportunity for you as the investor, for us to be able to purchase into Denver, especially at a reasonable cost. The roof has been repaired, windows and electric panels have all been updated. This property boasts a 3.37% vacancy rate as of now. So immediate rental upside. Currently, all the units are being rented as we speak. Like I was saying earlier, that has a large 1-bedroom unit with a walk-in closet, 1 bath, and then a kitchen and dining area. The demographics for where it's located has a very strong area in which they are, where this apartment is located, where this complex is located, because in the area there's just more established homes. People have been there for years as the development of Denver has continued on over time. And the nice thing about this property, we'll talk more about also, is that it's less than 1 mile to the Gates District redevelopment and Broadway light rail station. So the tenants here can have access to the train station if they want to get to downtown or anywhere else really in Denver. Quick access to I-25, as I was saying, it's right there off of the exit. And then also close to the Denver Tech Center and, of course, the Rocky Mountains, just to the west. And then also this property is within walking distance to any transportation, parks, restaurants, and places of employment. Looking at the financials for this property, which I know is the most important, definitely the most important for wanting to know if this is the right investment for you, if this is going to be a profitable return for you as my investor. Currently the rents are renting at $1,300 a unit. For 24 units, that's $31,200 a year. When we look at that, the annual operating, like I was saying, it's in a prime location. The purchase price being $4 million does make this a high valued commercial or multi-unit investment. If we put in down 20% and the property is financed at $3.2 million loan, meaning the initial $800,000, meaning initially we come into this property with the $800,000 equity stake in this, which is really good. Having actual equity in the property, especially for potential to sell or have to get out of the property. Equity grows annually, reaching $942,000 by year 4. When we look at the numbers, strengthen your financial position in this deal. The current cash flow has a strong rental income potential. The gross rental income is $374,400 annually based on the current lease structure. Rent is expected to be stable, especially in the location that it's at, and with the redevelopment of the Diamond District. So be expected to continue having renters continually wanting to rent and be in this area. But also this provides you a great opportunity for diversification, whatever that may mean for you. But at this point, at this juncture, you can see that getting into the Denver area, having a good, solid rental property that's producing profits, it's a great diversification for for your portfolio. When we look at the cash flow breakdown, monthly cash flow $5,034.57 for after all expenses and loan payments. By year 4, monthly cash flow is $4,517. Slight decrease due to rising expenses, but all still a positive cash flow investment. Depending on at least in the short term, depending on future with taxation and taxation relief, if those things do go in effect, then we can obviously see that go up and hopefully expenses decrease over the next few years, especially with the change in administration. Depending on, not trying to get in political about it, but at least we could hopefully see some decrease in external expenses and cost of living, especially in a Denver area where the cost of living is pretty high. The property does initially have some high upfront cost, but it does remain cash flow positive, ensuring that the investment is generating income. And we'll talk about why that's important here in a little bit. The loan payoff and equity growth with each mortgage payment, part of it reduces the loan balance, obviously, which when we pay the mortgage, the loan decreases, which in turn increases your equity in the property. So every time so we're already at $800,000 worth of equity, and we're just going to keep adding to that each year, each month. So, and then by year 4, the loan balance has dropped to $3.05 million. And your equity has grown to $942,000. So we can see over just a 4-year span how much we gain in equity, which is about $100,000, over $100,000 from what we started with. Very positive change for that. The expenses and operational costs, when we look at this, we can see that the annual operating expenses for this property is $101,463. Property taxes are annually $24,466, which is a standard cost for any real estate investment. But tax deductions will help mitigate this as we move into the future. The insurance is obviously, we know it's important. You got to have it, especially with renters. The insurance annually is $12,736, and that protects for any damage or liability that occurs to the property or even those living on the property. Utilities cover $10,000 annually, and this includes water, gas, electricity, and other essential services, so like sewer and water. So very, that not a huge expense, still part of it, but it keeps, I think that provides the tenants with the positive feeling of knowing that they've got those things taken care of and they can pay their rent and live comfortably while they're doing whatever they're doing. Maintenance and repairs for this property would be about $19,200 annually. As of right now, the property is in pretty good condition, especially with all the units being rented out, so they're all livable. My suggestion would be as tenants move out and new tenants come in, We can update the units in a reasonable cost, and maybe even start slowly increasing rent in the area, especially with new development coming in. And I think it would still bring a positive profit, and also stay fully rented, especially being in the Denver area. Also, some of the other expenses that are really, I think, important, especially being in Denver, is snow removal. We're looking at $4,176 plus a $5,805 for an unavoidable cost in Denver, but necessary for the safety of our tenants. The tenants, we want to make sure that they're safe when they leave when they're living in there, leaving and coming home. So some of the big takeaways from this is, with all the expenses covered, the property remains profitable each year. And I think that's important to note. Even though we are paying most of the utilities minus like cable or internet or anything like that, it's pretty reasonable for them. And yet we still maintain a positive in our return of investment. Property management fees are $25,000. Professional management ensures that tenant satisfaction. There's somebody there taking care of any on-call needs, that something broke, something's leaking, something needs to be repaired. So this just provides even more security for the tenant to know that there's somebody there that can help them if something were to go wrong in their apartment building or in their apartment unit. Depreciation for this property is a major benefit for you, the investor. This depreciates the value of the building, helps over with tax purposes over time. The depreciation deduction is $109,090.91 per year, reducing taxable income and improving net profits. So the more that we pay in as depreciation occurs over time, so does the taxable income decreases, and that increases our net profits. The tax shelter for this, due to depreciation and other tax advantages, the investor, receives a significant tax shelter, reducing that taxable income. Annual tax savings range from $27,000 a year to $30,000 per year. Bottom line is, for you, the investor, this depreciation to minimize your tax burden and reinvest profits that you make and increase overall ROI. So the more we pay in, the more, as we stay positive in the profitability, we increase our overall ROI. The return on investment breakdown for you is, 1 year it is negative. If you look at my numbers, it's a negative 3.75%, but that is initially due to upfront costs, loan payments, and expenses. But if you look at as the numbers continue through the years, year 2, 3, and 4, our ROI jumps to 11.06% by year 2, then 25.45% by year 3, and 39.41% by year 4. Very great numbers, but more realistically, looking at the annualized ROI, we would have an ROI of 8.66% over the 4-year period, making this a solid long-term investment for you, especially with the size of unit that this is. Property appreciation is at a 2% estimated appreciation rate per year. It means that the property gains $80,000 in value annually. By year 4, appreciation alone adds $320,000 in property value, increasing overall investment returns. The equity growth impact on ROI, since equity is growing, the return on equity jumps from negative 3.75 to 14.02 by year 2 and 11.85% by year 4. You, the investor, can leverage this equity for future property acquisitions or refinancing for better terms. And having that extra money to buy more properties just increases the value of this home or this property. Why this is a strong investment for you is, like I said, positive cash flow. Even in the initial, when you had the negative ROI of 3.75, I think it was, you know, you were still seeing positive returns, especially after the following years, and as that loan is paid down. Even with these expenses, the property generates over $5,000 per month in positive cash flow, passive income potential for you, which is very ideal for long time wealth. And then the equity increases every year, positioning you for future leverage opportunities for other properties, or even with this property alone. And then the building appreciation adds an extra profit to you and your portfolio. The tax efficiency, as we discussed, depreciation lowers the taxable income and tax savings accumulate, further increasing annual returns. And currently, the Denver market in that area is very strong, and it's due to job growth. Hospitals are increasing. They just finished the Children's Hospital a few years back. Population influx. Many people are wanting to move to Colorado, and especially be in the Denver area, and housing demand. And as has have increased people wanting to move into the area, that they need a place to be. And I think this would be a great opportunity, especially for those who are younger, maybe single, newlyweds, and or just starting out in the area. I want to get to the area. This provides an opportunity for them to come in and take advantage of the Denver market, the Denver necessities, by providing us, you, the investor, profits of renting and needing a place to stay. Which just continues with low vacancy risk, especially in this area. Final takeaways, I would say, is this is a great long-term cash flow for you, great tax benefits, equity growth, and this is a very strong asset. It requires, initially, I think it'll require a little patience because, like I said, the initial upfront costs are a little high, but as that ROI grows over time, especially by year 4, the returns are highly competitive, especially for the area, especially with the new development coming up just a mile away to the east of the property. Overall summary is, understand that the annual rental income is $374,000. Expenses are $101 each year, but still with that, like I've stated, positive cash flow. The depreciation reduces those taxes and will therefore boost the after-tax ROI. 8.66 annualized ROI for the 4 years, and it's just a stable, growing equity and appreciation. So very strong contender in growth and potential for this property. Another thing I'd like to discuss, just so you can kind of see here the sell comparables. We have 4 for the complex. The first comparable was sold in 2023, and it is 310 West Archer Place, Denver, Colorado. And this was a 17-unit building built in 1965, and it has 1 bed, 1 bath. Their price per unit was $247,059, and then price per square foot was $470.27. These units for 1 bed, 1 bath were slightly bit bigger than what the square footage for each of these units are for this property. So that's why it was a little bit higher for 17 units. But then we look at, there's another property, 285 South Lincoln Street, Denver, Colorado, and that was a 12-unit multifamily home, sold for $2.5 million and had a price per unit of $208,333. Now, price per square foot was $491.06, and it had 1 studio and 11 1-bed, 1-bath units. So, and that sold in 2023, so a couple years back. Then we look at property 3, 1975 Oak Street, Lakewood, Colorado. That was a 42 unit home, but that had 14 one bed, one bath units, 24 two bed, one bath units, and 4 three bed, two bath units. And they were selling for $239,000 price per unit, and then price per square foot was 298.19. And this unit sold for $10.05 million last year in 2024, February 2024. And this building was built, this unit was built in 1973, so a little bit older construction. If we look at the last number 4 comparable here, was 5269 West Center Avenue, Lakewood, Colorado. The number of units for this was 14, built in 83 and sold for $3.5 million at the beginning of this year, January of 25. Price per unit was $250,000. Price per square foot was $271 and 32 cents, with 14 units max, and they were all 2 bed, 1 bath. So very strong numbers for comparables, especially with units that have been built. We're looking at 1941 for comparable 2, 1965 for comparable 1, and 1973 for comparable 3. And they've all maintained, or if not, increased significantly in value. And I feel the same way as this. The comparables show that this property will continue to grow, continue to be important, especially with the changing in the area. So when we look at that, what I mean is we have within a 2 mile radius, there's a population of 77,000 people. And if we go to 5 miles, we're looking at 511,000. The households within the area of a 2 mile radius, we're looking at 32,000 homes in the area. And in 5 mile radius, we're looking at 241,000 properties around the area. And then what is also I like is this average household income for the area. Within the 2 miles, there's the average household income is $107,560. Within a 5 mile radius, that bumps up a little bit to $109,000. So it's in a very lucrative area. It's also in an area that has been well established and has been there for with this growth and expansion of Denver. So definitely unique. Now, like I was saying, West Mississippi Avenue comes off of I-25, and about a mile to the west is where the location of this property is, of Mississippi Plaza. And then, but to the east of the property, just a mile, is that Gates District. And Gates District is an up-and-coming area that I think will continue to provide a great opportunity for renters needing something a little bit more reasonable, as this is going to be a 887 residential unit complex, boasting $380,000 worth of or square feet of office space, and 180,000 square feet of retail space. So with just in a mile, a lot of new residential units are going to be coming up at this Gates District. I think I called it Diamond District earlier. I meant to say Gates. It's off of Broadway Station. A lot of opportunity for growth, especially with 380,000 square foot of office spaces and retail space. If renters, it'd be a great idea, especially if they want something a little bit more reasonable than what these probably might be going for, depending on how big they are per unit. This Mississippi Plaza provides a great opportunity for those who potentially could all be working here at the Gates District. But then not only that, right there next to the Gates District is the Broadway Station. They can get on the tram, go to downtown Denver, go see a Rockies game, get to wherever they need to within the Denver area. So definitely located within miles of downtown. So we're looking at 7 minutes that's drive time. And then if we're looking for, individuals that need to get to an airport. DIA, Denver International, is 36 minutes away. To get to the mountains in Boulder, we're looking at 34 minutes. We want to go south to Colorado Springs, 62 minutes. And then if you just want to get to Summit County, you're looking at 67 minutes. So very good location, especially being in northern Colorado in the Denver area. Like I was saying, this is a great opportunity for growth, development, and an investment property or investment that I would love for you to take a part of and be with me as a partner and join me in being able to see this positive cash flow and increase your profits over time. If you're looking for stable returns, you're looking to diversify, and you're looking for positive cash flow asset, this is the property for you. And also there are some good exit strategies too that you can take advantage of if need be. Being that we have equity, be able to sell it if you need to get out of it, and or 1031 exchange. But like I said, this is a property for you, and I think it's a great opportunity.